And thanks for joining us here on a Monday morning. I'm Marlon Bowling with you, and we're going to be joined now by Brian Hoops. He is the president of Midwest Market Solutions, and he hails from Springfield, Missouri. Well, Brian, all the talk over the weekend was, did we get enough rain to forestall any concerns about drought? And I guess the jury is still out. I keep hearing arguments on both sides. Yeah, we got a lot of rain in the Corn Belt, and some say it was a big miss in the northwestern part of the Corn Belt. So maybe they didn't get the relief they needed. What do you read this morning?
Yeah, good morning, Marlon. We did get some good rains throughout most of the Midwest. A lot of areas that needed some rain. Parts of Nebraska and western Iowa did receive very good rainfall. Associated with that rain was some hail damage across Iowa, some wind damage in Nebraska. There's a lot of reports of flat corn because of the extreme wind. But there is certainly areas of the Corn Belt that missed out. You know, the Dakotas remain fairly dry. Parts of Minnesota missing out on some of these rains. And the rains that were forecasted, you know, Wednesday, Thursday for Friday, those totals were actually forecasted much heavier than what actually fell in the gauge. And so rains, I can't say they were a bust or real disappointing, but compared to the expectations, they were a little bit of a disappointment. And so you combine that along with the supply and demand report, and to see a little bit of short covering in the overnight, but it's been, you know, kind of a low volume affair and kind of choppy.
Well, today's a bit of an unusual day because we're going to be getting the export inspection numbers. In other words, a measurement of how much has been shipped out of the country. We'll get the supply and demand report at noon Eastern, 11 o'clock Central, like you just referenced. And then we'll get the crop condition and crop progress report after the close today. So when you look at the WASDE report coming out at noon Eastern time today, what's going to be your first set of numbers that you're going to dig into?
Yeah, there's a lot of things happening today, so glad that you mentioned all that. This report typically is not a major surprise to the trade, but it does kind of set the tone for the rest of the growing year. So one of the first things you want to look at is the production number. USDA has not changed the production in July very often, but they do on occasion. And this certainly, I think, would be a year where you can make a case that they should lower corn and soybean productions, but if they do, it's going to be very minimal, I think. And then, of course, we've got acreages being adjusted. Corn acreage going to be up 1.5 million, soybean acres be down just slightly. And so you could have some minor adjustments to the overall production for both corn and soybeans. And of course, everyone's going to look at ending stocks and see how tight they are. Corn ending stocks are likely to be virtually unchanged, but in the soybean market, I think we could see numbers tighten up a little bit there. And certainly wheat, I think, will be a much tighter stock situation thanks to that spring wheat number that we're going to see today.
So the average guess on soybeans for the 2021 and 2022 marketing year would be 140 million bushels. Are you still pretty comfortable with that?
You know, those are some pretty tight numbers, but I think that's a number that the trade is going to go with for now. You know, and that assumes a yield that's a very strong yield. And then the question remains is are we going to get enough rain in the last half of July and August to make this crop the size that the USDA is predicting? So they've come out of the gate with trend line or above trend line type yields for both corn and soybeans. And now, you know, we've gone through this growing season where it's been really dry in the spring. A lot of areas, especially the Dakotas, Minnesota, drier than normal. One of the driest June and Julys on record in a lot of these states. So these numbers, ending stocks are going to be very tight, I think, all the way through this fall and into the winter months until we get an accurate handle on this crop size.
Well, overnight, December corn was 2.5 higher at 519.5 per bushel. Let's take a look at soybeans. Here you have the August contract 4 3/4 higher. November new crop soybeans were 2 3/4 cents higher at 13.32 per bushel. Now, with our quotes provided by bar chart on, let's go with Chicago wheat, we have September a penny lower at 6.14 per bushel. And in Kansas City wheat, you have the September contract 3.5 lower at 590.5. And in Minneapolis spring wheat trade, you had September about 7 3/4 higher at the finish of the Globex market. It was at 8.22 per bushel. Well, that's how things stacked up in the overnight grain trade. We'll come back and we'll talk livestock right after this. Come on back. Well, we're back with you, and we're talking with Brian Hoops of Midwest Market Solutions. Well, lots of interest in the grain markets this week, that's to say the least. Brian, when we went home last week, we had live cattle just barely even trying to hang on to unchanged. Meanwhile, you had the feeder cattle market showing pretty decent gains Friday afternoon. And on the lean hogs, they were higher too. So what's the reason for that divergence? Have you heard?
Well, the hog market, we're seeing a little bit of strength in the cash markets. Cutouts are moving higher once again, and so we've had such a big correction. I think a lot of traders anticipating that the export markets are going to improve, and we did see some good exports on Friday, so that helped to rally the hog futures into the end of the week. The cattle market had kind of a tough week as far as the cash trade goes in the Southern Plains. Seems like dress trade cattle are much tighter in supplies, and we're seeing more strength there, but you can see there's a lot of bear spreading taking place in this cattle market, a lot of strength in these deferred contracts. Trade is anticipating that the DEES and the Feb and the April contracts are going to be substantially higher than what the current markets are now, as we have the tightness in supplies occurring during that time frame. And so we're seeing a lot of that type of positioning. Feeder cattle finding some buying interest as well, as the corn market was down last week, and that seemed to really put a spark in the feeder cattle market.
Do you think that'll change now if you do manage to get a rebound in the corn market today or not?
Yeah, I think the feeder cattle market will remain very sensitive to corn prices. I don't think there's any doubt about that. But we are, getting enough rains here now that there may be a lot of selling in the corn market on rally attempts. A lot of the dryness concerns have been alleviated, and at least until we get into the fall time frame, when we may start to see some spec buying coming back into that corn market when we start harvesting in the Dakotas and Minnesota, where yields are expected to be so detrimental. But look for the cattle market here really to focus on the cash this week. The cutout values, if they could stabilize, I think you could see a little bounce in this cattle market.
All right. Well, Brian, thank you for all the information. I appreciate you talking with us. By the way, the dollar value is about 200 points higher in the overnight trade. Brian Hoops is president of Midwest Market Solutions. Tammy, we're going to be getting things underway at the bottom of the hour.